This week, 3 economic reports will be coming out, giving us new insight into the state of the housing market. Also on Wednesday, the Federal Reserve will announce that they'll raise interest rates again, which does impact mortgage rates.
Yeah, Scripps News congressional correspondent Stephanie Liebergen digs into the housing market as it stands today and what it would take to give home buyers some relief.
If you're in the market for a house, you might have noticed that prices in your neighborhood are still high. Simply put, that's a consequence of supply and demand, and experts say there is no quick fix. This is a housing market like no other.
Home sales are lower, but home prices are still rising, which is very unique because of the limited inventory condition.
Supply of homes that's available for sale right now is the lowest in more than 25 years, despite the fact that our population is considerably bigger. So there's really no comparison to that set of circumstances.
11 interest rate hikes over the last year and a half means mortgage rates went from a record low around 2.5% in January 2021 to over 7% today. So what would turn the market around? More home construction could ease the strain, but that can't happen overnight. And if the Fed lowers interest rates, that would lower mortgage rates and potentially entice some homeowners to sell. But a meaningful drop in interest rates could mean bad things for other parts of the economy.
The only way mortgage rates are going to drop that significantly is if the economy completely rolls over. Well, in that environment, unemployment's going up. That's not exactly the time when people would be looking to buy houses or be able to buy houses.
Congress could also impact the housing market. The National Association of Realtors has been lobbying lawmakers for a temporary tax break for mom-and-pop real estate investors.
If they were to sell it to a first-time buyer, young adults first-time buyer, then the capital gains tax would be reduced from that sale. So at least provide some financial incentive so that mom and pop real estate investors would unload those properties onto the market.
Real estate is local, so what's happening here in Washington, D.C. might be different than what's happening in your neighborhood. But overall, experts don't foresee another spike in home prices in the next year or two, which should be good news for potential buyers. Stephanie Liebergen, Scripps News, Washington.
Meanwhile, a new school to train mortgage brokers is open. The Keystone Mortgage Academy will have an important focus. I sat down with Prime Mortgage President Janine Kempfer to talk about her efforts to launch this school. She worked with Denver Public Schools and philanthropists to create this free course inside George Washington High School. The program aims to help increase minority home ownership by training people of color in the lending industry. Studies show Black households have the lowest home ownership rate of any group nationwide. The Academy will train brokers who understand historical discrimination in lending, and they'll be able to relate to the communities they serve.
There are, according to Freddie Mac, 7 million mortgage-ready minority families today that just don't know the steps to take to become homeowners. By producing highly trained mortgage professionals, we create a bridge to historically underserved communities. And that's how we're going to reduce the homeownership gap.
The Keystone Mortgage Academy is a 3-month program. There will be 15 students in this first round, 5 high school graduates, 5 college graduates, and 5 career changers, so a diverse group. They'll get their broker's license, have internships during the program, and help with job placement after. Kempfer hopes to have another group of students after this pilot program, and eventually she hopes to create a nationwide program.